The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning, folks. Welcome to the February 28th, the terrific Tuesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there's having a great day. Hey, let's make sure we have an extraordinary one. And the easiest way to do that, well, it's to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I at just past 11 o'clock in the morning. I want you to know I'm absolutely grateful for your presence here. But even more important than that, and that's this. During this next 53 minutes, I'm here to serve you. So feel free to pick up that phone and dial on in at 877-927-6648. Would love to hear from you. Now, if you got a question but you can't call in, you can always send me an email. For that, send that off to Steve at TFNN.com. And inside that subject heading, please put radio show question. Of course, if you're inside our Tiger's Den, well, then any and every ping will do. So let's go ahead and get this show started on terrific Tuesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, a slightly mixed bag out there. That mix really coming from the Dow, which is up 106 points. I'm sorry about that. The other U.S. indices trading the upside. The S&P's up 3, NASDAQ up 18, Russell's up 15, semis are up 10, trannies up 33, gold's up about $10, silver 12 cents, light sweet crude up $1.76, natural gas off 9 cents, and the 30-year Treasury down 9 ticks, 123.30 is the print there. Now leading the charge, dollar-wise, the upside, you've got Mercado Libre up $25, 2%. Veritiv Corp is up 17, 18 bucks, 12%. AA On is up 15%, 14%, $11 and change. Decker's Outdoor, $11 and change, nearly 3%. To the downside, it's Universal Health Services up 10%, about $15. O'Reilly Automotive down $13, 1.5%. Expel Inc. is being expelled. It's down 16%. That's off $12 and change. Asthma Holdings off 11, about 1 7/10% to the downside. So we've got some movers and we've got some shakers. But let's do this here. Let's take a look at the only 4 charts you need to pay attention to all day long. We're going to simplify it here. Those 4 charts being the U.S. dollar index, that's in the upper left-hand corner. What do we know about it? We know that it is going to complete a TD 9-count pattern today. Yesterday was bar number 9, and you also have a new profile that is attempting to form. We're using Stevie's Advanced Doppler tool on this set of charts out here. So the profile levels that you'll see for the U.S. dollar, gold, and the ES Mini will not be confirmed until 6 o'clock, 6:01 this evening. But the data is accurate. We do know where buyers and sellers are lining up as we speak at 11 o'clock in the morning. So a TD 9-count top for the U.S. dollar index. Now, what that means is that if we're to see a close above 105.32, or whenever we see a close above 105.32, we'll certainly hear in the next few days, that would tell us about a strong upward momentum move. Otherwise, what price should do is continue to pull back. Now, it's a bearish structured profile. Odds favor if price can close below the center level. That's at 104.52. So far, it's tested and rejected that level. But if price can close below 104.50, that is likely going to result in a further move lower, that move lower targeting 103.84. Again, that's the number right now. We may have different numbers. We may have no numbers come tomorrow. But we'll use the data that we have available. So I would be watching 104.50. If we see it close below that, what we should get is we should get a third day of rallying. That would be tomorrow out there. That's for the U.S. dollar index. Now, the U.S. dollar index is certainly going to impact, at least we know that directionally speaking, that and gold are still tied to each other. So if the U.S. dollar index is making a TD 9-count top and choppy voice, I don't know about the choppy voice, and you've got the gold that has a TD 9-count bottom, And that only gets negated with a close below 1815.50. And it is also forming a new profile, or attempting to. And that resistance level for it is at the 1856 level. Now, the next resistance area for gold on a further rally is at 1838.20, the center of that profile. So you've got support to be watching there. We've got that TD9 count bottom. You've got the U.S. dollar index. So there should see a rally as long as that U.S. dollar index continues to move lower, and watch that 104.50 level. Now let's go to the equity markets. Let's take a look at the ES Mini and the spot volatility index. So let's go to the chart on the right-hand side. That blue line at 2080 is the spot volatility index. That's the 50-day exponential moving average. When prices are below that, that is a bullish signal for the ES Mini, or the S&P 500. As we take, so right now, if we get a close below 2079, that's going to suggest a further rally. Well, in the case of the ES Mini, we know that it has some resistance at 40.13, and then if price can close above that, there's resistance at 40.58 out there. So we've got the setup here. We have the setup for the U.S. dollar index to move lower, for gold to move higher, for the ES Mini to move lower, and the spot volatility index to move lower as well. But watch those areas. Those are really going to be key. Again, those keys being 104.50 on the U.S. dollar and 20.79 for that spot volatility index. Now, there is more. We've got more. Wait, there's more. What I mean by we've got more is, let's go take a look at, so why haven't the markets taken off right at this stage here with that setup? It's a great question. We can answer that. And we can answer that because we take a look at market breadth here. We'll take a look at our TAS market breadth. We look at the weekly, the daily, the 240, and the 60-minute. They are all in a negative position, or they are all in a bearish position out here. We need to start seeing these flip to the upside, a bullish crossover. And the first one that would take place, now I'm not looking at a 30-minute set of profiles just yet, but if we look at the 60-minute, we'll just simply expand this out. What we can see is there's 141 instruments. Just go all the way over to the left as we speak at 11:12 in the morning. 141 instruments trading below profile, 182 above. So not until that condition changes will we see that move higher out there. That's on the hourly time frame. On a 4-hour time frame, you've got 104 above and 206 below, so it really has its work cut out there. And then the daily time frame at 66 above, 198 below. So expect a choppy market no matter what, just simply because of the TAS market breadth for the S&P 500. But there's the answer to your question: why haven't we seen liftoff? And it's because we have negative market breadth. So we've got some believers on one side and some disbelievers on the other side. If we take a look at the NASDAQ 100, which can lift all boats higher, well, its weekly time frame is the only one that is in a bearish position or bullish position right now. For the 60-minute time frame out here, what we see is there are currently 14 instruments above profile and 56 below. So the issue with regard to answering your question in your mind, whoever you are, which is all of us out there, why isn't the market moving, Stevie, when you've got that spot volatility below the 50-day and you've got a TD9 count top in the daily? And it is just simply a market breadth issue. And lastly, to finish out this segment here, let's take a look at the 30-minute time frame. And a 30-minute time frame for the S&P ES Mini right now, also still in just a slightly bearish position. 123 above, 121 below. Let's take a look at the NASDAQ 100. NASDAQ 100 is telling us we have at this moment 17 above and 39 below. So short-term time frames, we have bearish crossover, we have bearish market breadth, and that's why, and we should expect until that condition changes, to see a choppy marketplace. Steve Rhodes with TFNN. We'll be right back.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kegstad's Tiger Forex Report. Teddy Kegstad breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Let's get to some of our questions. We've got 2, 4, 5 that have come in, so thank you for that. And we're happy to be taking more. The first one coming in from Ray in Sarasota. Ray says, on Monday, Nordic American tankers came out with earnings. They were very strong, and they raised their dividend to 15 cents for the quarter. Similar raises for the remaining quarters of 2023 may occur based on current and projected tanker rates. Can you give me your opinion of support and resistance? I'll tell you what the charts are telling you. So support and resistance, if we take a look at the daily time frame, your support level is going to be between 381 and 386. Now, I do not see, so you've got a nice A to B equals CD pattern out here, Ray. So we'll just simply draw that in. I'll draw on the A to B line, and I'm just going to move that over to the C mark out here just to give you a 1-to-1 price projection level. And this should do more than a 1-to-1 price projection, but the 1-to-1 gets us up towards the $5 level, right around $4.59. Now, price is taken on a swing point on a weekly base. That swing point was from the week of November 25th. The volume there is 24 million. So far this week, we are at 13 million. It's only early part of Tuesday. So this is going to have volume on the weekly basis to confirm an A to B equals CD to the upside. And on the monthly basis, although we only have 28 days of the month, and by the way, happy birthday, David White. Now his birthday, my recollection, is on the 29th of February. So he gets gypped, right? Because we don't have a 29th this month. So we got to wish him a happy birthday today. But on a monthly basis out here, the month of November 2022 did volume of 106 million shares. You're at 73 right now. So on a monthly basis, you're going to come in light, but you're still above those swing points. You've got an A to B equals CD to the upside. You were asking about support and resistance. Well, we gave it to you on the daily. On the weekly, it's down at about 384 to 362, top of the profile, and then oscillator and change line. In the case of the monthly time frame chart, the support level, I can't give you any resistance out here. The support level would be down at about 223. And the 351 is the top of the box. You're above the top of its new profile. So everything on Nordic American Tankers, again, ticker symbol out here is NAT. Let me open this up just a tad, the weekly, see if I can find any other resistance out here other than swing points that you're coming into. And I really can't, Ray. So it looks to me like this is gunning for that swing point from back on May the 1st. Now, this is a weekly chart out there. That's anywhere between the range of 580 at the low to 654 up at the high. So best of luck with you on Nordic American Tankers. Looks like a good trade to Stevie. And I hope that helps you out. And thank you very much for the request. Our next request coming in from the Tigers. Oh, hold on a minute here. Hold on a minute, Steve. We've got Earl on the line. Let's go out to Earl in Seminole. Earl, thanks for holding. Thanks for calling. How are you today?
Good, Steve. How are you doing?
Good. Nice to hear your voice.
Yeah, I'd like to have you take a look at UUP.
Okay. And tell me what you're doing and how I can best help you.
Well, I've got a position in it, and I was looking for where it might go or where it might pull back to.
Perfect. Okay. So for the UUP, it's really going to be based upon the U.S. dollar index. So I'm going to give you two figures here. And it's really quite different. If we take a look at the daily UUP chart, are you able to watch us on Tiger TV or at least catch the archive?
Yeah, exactly.
Perfect. Okay. So we take a look at UUP. First thing that you'll notice out here is that this does not have a TD9 count top. It topped on bar number 7 here. That's why we use the actual underlying instrument, which is the U.S. dollar index, which does have a TD9 count top. But your question with regard to trying to take a look at the U.S. dollar index versus the UUP and where the UUP might pull back to, I would say that the likely target on a retracement is right around 28.13. 28.13 is this daily oscillator and change line. You've also got a new profile that is formed, which is below price, which is a bullish condition. However, we've got a bearish structured daily profile on the underlying instrument, the U.S. dollar index, and therefore I kind of will not pay attention to the UUP profile areas out here. Instead, I would pay attention to the U.S. dollar index. But to specifically answer your question, I would use that green oscillator and change line as a price target. And worst case would be 28.10, which would be the bottom of the current profile. Any questions about this chart?
No, that's very good.
Okay, so I'm going to switch over real quickly here. Oh, wait, I didn't have that chart up, so you couldn't have seen it. Darn it. It was U.S. dollar. It's a black background chart, so let me just explain this one here, and then I'll come back to UUP. So here is the TD9 count. That's going to complete today. There's a new profile, Earl, that is attempting to form. A profile is where it gives us and provides us, tells us where the buyers and sellers are located. Price right now is down below where these sellers are located, which is at $104.82. The actual high of the day has been 104.85. If price closes below 104.50, this is the U.S. dollar index, Earl, that's going to then tell you to expect a further pullback inside the UUP because the U.S. dollar index should target 103.84. Now what I'm going to do is switch over and actually take a look at those white background charts so that you and others can see them and you can understand what I was referring to earlier, which is there's a new profile that has formed, and that is below price. It is different than what we just took a look at on the underlying instrument, the U.S. dollar. Here, what we're going to use is our price target to the downside. This is under the assumption, Earl, that price for the U.S. dollar index closes below 104.50. Should that unfold, we then should see UUP pull back to about 28.15 or 28.10, which is the bottom of that new profile. Now that I've taken you through the correct charts out there, I hope that helps you. As a personal note here, I would say stay long the U.S. dollar. Stay long. Have you been in the trade for a while?
Yeah, I have been, and that's why I'm looking for a possible exit.
I don't think you exit this trade here for a while. I think the U.S. dollar index is headed substantially higher. Let me see if I have those charts handy on my screen here. I do. I'm going to switch back to the black background charts and show you what it is that we're taking a look at. So give me a moment here. So the daily time frame we've already discussed. I don't have the advanced Doppler tool on this daily chart, and that's why it's not showing the current profile that is attempting to form and likely will form by day's end. But if we take a look at the weekly chart out here, the resistance level that the U.S. dollar is dealing with is 105.01. So it does make sense that on the weekly chart we get up to resistance. On the daily we create a topping signal. But if we take a look at the monthly chart, price is back slightly above the center of its polar structured profile, which is at 104.34. I believe the U.S. dollar index is headed back up to its highs, at least at 114.40 level. That would say that the UUP is going to get up to the 30-ish area, 30.50, above that on a yearly basis. The yearly basis, we've got an A to B equals CD to the upside. And that says that over time, the U.S. dollar index should make its way up to the 116 area. So if you're long you don't see that chart? Yeah, you should see the chart. No, the black background chart. I hope we do. I think this is a good trade for the long term out there.
All right. That's what I was looking for.
Oh, perfect. Glad to give you what you're looking for. Thanks so much for calling, and you have a great day. Okay.
Yeah. Thanks, Steve.
You bet. That was Earl in Seminole, Florida. Now, let's switch back to the white background charts out here. Let's go to our next request. Well, we'll have to do this when we get back from the break. But what we're going to do when we get back from the break is take a look at Apple. That's for G Motion inside our Tiger's Den. Apple, right now, trading out at 147.96. It's got resistance up at the 149.35 level. Steve Rhodes with TFNN. We'll be right back.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. Dow's down 109. The other indices are trading to the upside. We're taking a look at Apple, which is trading out right now at 147.99. It's below profile, and it's below its green oscillator and change line, G motion. So, if the rally sustains itself, fund buying and so forth, what we should see Apple do is move up into resistance. Resistance here is between 149.35 and 150.96. I don't see any kind of a topping pattern on the weekly time frame chart. So we've just got a bit of a consolidation within profiles. That's between 140.78 all the way up to 157.38 out there. A quick peek at the 30-minute time frame chart for Apple. This tells us what? Does it tell us anything? Not really. Just a sideways-ish type move out there inside of Apple. So I'd say right now at this stage here, further rally should take you up into resistance. Again, 149.35 would be that first target area. So G-Motion, I hope that helps you out with regard to Apple. Let's go to the next request out here. This one coming in from Dan inside the Tiger's Den. He wanted to take a look at Alta Salons, ULTA is the ticker symbol. Now, Alta, this was a couple of days ago, so this was on the 24th. Today is Tuesday. That would have been Monday. On Monday, what Alta did was it confirmed a Rhodes Momentum Indicator top, created a three-river evening star candle formation. And right now what you have, Dan, is just a good old-fashioned consolidation with inside the profile. So nothing broken. Remember, when you get a topping signal or pattern out there, all that's really required is for price to move down to test support. Now, granted, it hasn't gotten all the way down to 514.27, the bottom of that profile out there, but just got a good old-fashioned consolidation. Price will need to take out the high from a few days ago. That's up at the 537.52 to negate that topping pattern out there. But otherwise, all you have is just a consolidation. On a weekly basis, you may get a TD9 count top between this week and 2 weeks from now. No, this week and next week. You will get, or you should get, not so fast, Stevie. You will get a TD9 count pattern as long as Alta on Friday closes above 520.76, near 526.02. If you do that, then on a weekly basis, you'll have a confirmed TD9 count top. That pattern, again, would complete next week. Now, that doesn't mean it will go higher. It could go higher. Resistance, there's also a new profile out here, Dan. Resistance 537.52, support between 480.80 and 490.98. On the monthly chart, I don't see any kind of a topping pattern or signal. So overall, this looks to me like we've got a short-term pullback out here, consolidation with inside the daily profile. And even though we have a new profile and a potential for a TD9 count top, price above that green oscillator and change line, it's really more of a neutral condition. It's a bullish condition on the monthly time frame. So, Dano, I hope that helps you out with regard to Alta Salon, or at least provide you with some additional information to consider. The next request was to take a look at SBSW. This is a twofer for Dan. And I don't have SBSW up there. What did I do with that? I tell you what, we'll come back to SBSW because Stevie made some kind of mistake somewhere. And what we'll do is we'll take a look at AMD. This one is for Duncan Steve. So with regard to AMD, what we see here is what? Great question. Let me pull this back further. So we have a confirmed sell the D point pattern. That confirmed on the trading day of February 3rd when it generated that bearish shooting star candle. Now what that has led to is a test of support, which so far has pretty much been the top of its profile up at the 77.10 area. So you've got a top. Price nothing is broken here. It's just pulling back into support areas. It's below support. It's below resistance and above support. Support being 77.10, resistance being 81.54. On a weekly chart out there, you've got price trading above profile, so this looks pretty good. You've got a confirmed A to B equals C to the upside, but no bearish reversal candle there. And on the monthly time frame, you've got a nice TD9 count bottom. Price should target that 90.69 area out there. So to summarize what we have here for AMD, if I can, let's look at a 30-minute chart here real quickly before I do that summary. So price pulls back, test breakout support this morning at 77.54, tests and rejects it. If price can get above 78.67, 79.35 is next up on your cards for a potential little battle. So AMD overall, I'd say, what do you got here? You're really pretty neutral, so to speak. Overall, that's what I'd have to give this pattern out there. So I do hope that helps you out, Duncan, with regard to AMD. Now let's try to figure out where Stevie put. Maybe I didn't put it anywhere. Did I put SB? There we go. Now we've got SBSW, Dano. So SBSW, today, I'm going to expand out the daily time frame. That's probably why Dan is looking at it. Today will become bar number 8 of a TD9 count. Now, what Dan knows, and I want each of you to know as well, is when you get a bar number 8 count, 90% of the time it's going to go on to form a bar number 9, a completed bar number 9. So odds favor, there's a 90% chance that by tomorrow, SBSW will confirm a TD9 count pattern, and it will complete then on Thursday. What that should do, Lan or Dan, whichever you prefer. I think you prefer Dan, though. What this should then do, Dan, is make its way up to resistance. The first level of resistance is going to be the bottom of its profile. The bottom of its profile is at the 855 level. Now, that's going to be a significant resistance level. Why? Because both the center and the bottom are at that same spot. But if price can clear that, then you're looking at a run up to the 886 area out there. So SBSW on its daily time frame should go ahead and confirm and complete a TD9 count pattern. That should be in place by Thursday. If we take a look at the weekly chart, it doesn't look good. Price is pulling back and testing the area of support. That support being the low of September 23rd. That low being $8 even Stevens. So far for the week, we've gotten down to 803. Now, the volume on that bar, that September 23rd bar, was 20 million shares. So far with the day and a few hours, we're at about 6 million shares. So let's just say 5, maybe times 5 would be about 25. That's not necessarily real, but you are pulling back with volume. So what you don't want to see, Danny, is for price to close below $8 even Steven on a weekly basis, because that would then be telling us that we could have lower price coming. Lower price to where? Excellent question. I would say $7.39. That's the monthly TD9 count breakout area. So how are we going to summarize SBSW? We're going to summarize Sibane-Stillwater Limited as potentially forming a TD9 count bottom between now and Thursday, then giving us a bounce, and we'll definitely get that bounce as long as price is trading above that $8 mark out there. If price is trading below that, then I'm a little bit uncertain. In fact, I'd say that 739 looks pretty good out there. So I hope that helps you out with regard to Stillwater. Sibane, is that how you say it? Sibania? Stillwater out there. That was for Dan inside the Tiger's Den. We've got a request from Jambalaya inside the Tiger's Den. I don't think I got to this yet. No, I did not. So let's just go back to this one chart here. And let's take a look at AMC. Now, I believe that Jambalaya was saying that AMC is out with earnings. Let's see here. Good morning, Ms. Rhodes. Some discussions about AMC earnings today. What does the chart say in recent move from the 6 to 7 with high shorts and maybe even higher tides? Grazie. Well, what you're going to get inside of AMC today is bar number 8 of a TD9 count. And that's telling us, that's right up at about the TD9 count breakdown level of 748. So this says to you and I, even though it's performed well, remember 90% of bars that are you get to a qualified bar number 8, and it looks like today will be that. We'll go on to form bar number 9. Price is trading into a swing point from back on December 1st on a daily basis. Volume there was 96 million shares. You moved into it and closed into it yesterday with 122. Not bad. 122 moving into 96 million. What that tells us is that as long as price remains above, the level that remains above is 721. Odds favor this is going to get up to that 915 level, Jambalaya. But you've got a daily TD9 count pattern. That should complete by Thursday, and then that should take us back. That should set off a retracement back towards the $6.23 area. Steve Rhodes with TFNN. We'll be right back.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. So before we went to break out there, we were taking a look at the AMC charts out here. I went ahead and threw up the Seasonex. Those are the seasonal charts. So we've got 9 years worth of data, and that's what you're seeing on our screen here. The red vertical line happens to mark where we're at today. Remember, we took a look at the chart, was identifying a TD9 count top that should form between today and Thursday, and then we should see it move lower. Well, geez, that is following right along with the seasonals out here. So it does suggest that once that happens, you're going to be in a choppy period, somewhat of a sideways consolidation out there. That's if the pattern continues as it has on average for the last 9 years out there. So I hope that helps you out with regard to Seasonex and what it is doing. The next request comes in from Hector and Patty. They want to take a look at IWO. IW, please confirm we have a buy the D point on the ABC down, which began on February 27th. Thanks and have a great day. So what Hector is looking at, I believe, let me just make sure here. You got February. Yeah. So he's looking at this pattern here, which, by the way, if we take a look at this, we can see a wave number 7 top out there. So that was the high. I don't think it completed the A to B equals CD pattern. If I just to the upside, so and I'll get to his question. But here's the A to B. It just looks like to me that it has not completed that. Yeah, that's a little bit too high. Let's get back to the exact question. So with regard to an A to B equals CD to the downside, we're going to stop from that wave 7 high out there and go all the way down to where it makes its low, which was on February 10th. Then it bounces up, and all we have to do is just take that same line that Stevie drew, so I didn't duplicate it here. Come on. Oh, my goodness gracious. There we go. Just draw that to the C point. It has not really completed it from this standpoint, Hector and Patty. The price projection level for the 1-to-1 gets you to 227. And the low from a couple of days ago got us down to 229. You know, is that $2 enough of a difference? It is for me. So it didn't complete it did not complete a valid, it didn't complete the buy the D point pattern. What we do have, though, is right now we have price consolidated. It doesn't mean it hasn't bottomed. It just means it did not complete that A to B equals CD pattern. Right now what we have, yesterday price was able to jump back up, gap to the upside, just ever so slightly, and is back inside its daily profile. So the next upside target, that would assume that price today can overcome and close above yesterday's high of 235.43 or 235.14. If it does that, you should see a move to 236 to 237. 236.33 is the center of that daily profile. 237.25 is its green oscillator unchanged line out there. Is there anything else that I can help Hector and Patty out with regard to IWO? Well, I guess what I could do, So IWO also on a 30-minute basis, it's also trying to form an A to B equals CD to the upside here. It needs to take out the high from 10:30 on February 27th. That was yesterday at 235.43. If it does that, you'd have an A to B equals CD to the upside, knowing that there still is a battle at 236.12 out here for IWO. So let's go see if we can get IWO seasonal charts. So let's come back out here. Let's put that up. Let's see if we've got that as an option for us. So we'll put in our search instruments, IWO. We'll wait to see what populates on our screen. And for IWO, well, there we go. There's the Russell 2000 growth. So we have out here, Hector and Patty, is 22 years worth of data. This shows us actually kind of being in a decline. This suggests that we should have topped around February 16th. We've topped around February 2nd, as you had pointed out, to help create that A to B equals CD pattern. Now, this suggests from a seasonal basis over 22 years that the IWO doesn't generate a bottom until about March the 15th, about the middle of March out there. So hopefully that's seasonal. Now, let's just see. That's 22 years. What's taken place over the last decade, and not much different than what we just took a look at there over the last 22 years. So Hector and Patty, have a terrific Tuesday as well, and we will look forward to speaking with you again soon. Bob in Spokane wanted to take a look at the May wheat contract out here. May wheat, Bob, if you're looking to get long, you're going to have that opportunity between today and Thursday. Today will become bar number 8 of a TD9 count. Let tomorrow's bar complete, but you've got a 90% probability that it will complete. And then what you should see wheat do is bounce up towards its oscillator and change line. We're below daily, weekly, and monthly profile levels out there. So there is no further support. Well, the only other area of support is down at 681.75. That comes from the monthly time frame chart. That on a monthly basis is a TD9 count breakout area. This top with a TD9 count top, it did that back during the month of May of 2022 out there, and now it may form a TD9 count bottom. We are in bar number 8. That is for the month of February. Bar number 9, the month of March, will need to close below $806. So that's next month. So, you know, this would just that, and you'd love to have a nice bottoming pattern on the monthly time frame out there. And that's what you would need. So I think on a daily time frame, what you're looking for is a TD9 count bottom to form between today and Thursday. Let's see if we've got wheat up here as one of our options. There we go. We've got wheat. So now let's just kind of get a feel seasonally what wheat has done. So we're talking about bottoms out here for wheat. That's 10 years worth of data. We've got 32 years worth of data. And the 32 years worth of data out here, let me adjust this just a tad. So the 32 years worth of data says that this tops right around March 4th. Says we should be forming a bottom and moving higher. So I don't know that as I take a look at that seasonal chart versus this current chart, whether it's really following along. I would say it is not really following along out here. So I would just ignore the seasonals at this moment here, and I pay attention to the TD9 count pattern for the daily time frame. Certainly what you'd like to see take place is while that pattern is forming, let's say a 30-minute time frame chart showing you a bottom pattern as well, such as this one. I'm not saying this is the one, but this did generate a Rhodes Momentum Indicator bottom at 10 o'clock this morning, which has led to price consolidating with inside its current profile. The key level here, price would need to close above 721.25, Bob, in order to suggest that this is more than just a little bit of a counter trend move to the upside. If you did get a close above 721.25 out there, that would still suggest we get bar number 9 to complete tomorrow, and then price running up to the 744.23-ish area. So that's our take, Bob in Spokane, with regard to the May contract for wheat. I do hope that helps you out. Lastly, let's go take a look at our next request out here. This is from Duncan Steve, who wanted to take a look at the TQQQ. But, of course, Duncan Steve and everybody else out there know that you've got to be paying attention to the NQ out here. So on the TQQQ, this shows support, profile support, down at 2027 out here. But you're not going to pay attention to that, Duncan, because you know that real support level to be watching is coming from the NQ. And from the NQ, that is at 11,975.50. If price closes below 11,975.50 out there, then the TQQQ is going to run lower. Now, run lower to where? I would say that the price target to the downside would be 1896. That is its TD9 count breakout level. We are not there yet. So what this should do is this really should bounce up towards 2378, that green oscillator and change line. But if the NQ closes below 11,975.50, well, that call would absolutely be wrong. Steve Rhodes with TFNN. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. So as your weatherman at 11:54 in the morning, we're calling for choppy markets. The reason we're calling for choppy markets is if we take a look at the S&P 500 TAS profile market breadth for the weekly, daily, 240, 4-hour time frame, and hourly time frame, you'll see each of those, the speed dials up in the upper right-hand corner, they're all in the red zone. And the red zone, or you can see the negative percentage numbers out there, they tell us that sellers, from a profile standpoint, have the ball. On a 60-minute basis, we still have 141 instruments above profile, 182 below. In order for the market to get any kind of legs, this has to shift. If we take a look at the NQ out here, we have a similar set of facts. The only difference here is the weekly for the NQ is still slightly bullish. When I say slightly bullish, it's a toss-up. 17 above profile, 17 below profile. When we take a look at the daily, the 240 and the 60-minute chart, again, bearish market breadth. Choppy market, somebody might take a look and say, hey, Stevie, choppy market, prices should head lower out there. Well, the caveat is, and we'll go back to these charts, if we take a look at what's going on, you've got the U.S. dollar index with a top, trading with inside a bearish structured profile, likely to lead to lower price. That should be a positive for the ES Mini. Bottom left-hand panel chart, new daily profile trying to form, with support at 39.69. Spot volatility, the bottom right-hand chart, below the 50-day exponential moving average. Everything here is set up in order for the markets to move higher. The thing that is not set up is we have that negative market breadth. Price trading below support versus those trading above resistance out there. Lastly, gold is responding okay because gold doesn't have that same pressure that the S&P or the NASDAQ does with regard to the number of constituents inside. Gold is just gold. And so gold right now is taking its P's and Q's from the U.S. dollar index. So gold has a TD9 count bottom, the U.S. dollar a TD9 count top out there. Hey, if the TD9 count top fails inside the U.S. dollar index, gold will head lower, and we'll see gold close below 1815.50. But in the meantime, we should see the U.S. dollar index move lower, gold move higher with a price target of about 1856 out there, and it's just going to be about market price. So right now, at least for the next hour or so, I expect choppy conditions to persist. Folks, stay tuned. Got great programming lined up. I'll see you back here tomorrow on Wonderful Wednesday. Please have a terrific Tuesday. Thanks so much for joining me. Take care now.